your reserves are, whatever your operating account is, and 1 month's assessment. You add those three up, that's the limit you should have for employee dishonesty. Also, make sure if you have a property manager, they're named as an additional insurer. The Illinois Condo Act in 2002 added you must carry ordinance or law coverage, but it doesn't tell you what limit you need to carry. I find this very frustrating. So I'm going to give you a quick tip. First of all, there's three parts to ordinance or law, A, B, and C. It's part C, increased cost of construction is what I'm concerned about. Up to 15 years old, I would use 5%. Whatever my limit is, if it's $20 million for the blanket for fire, 5%. Over 15 years old to 30, I would use 10%. And then over 30, 15%. It's just a rule of directors and officers liability. Just know this, not every D&O policy is the same. So when you're doing a comparison and you see $1 million limit here, $1 million limit here, that doesn't necessarily mean you're getting apples to apples. There are some basic forms of D&O that has many exclusions, and then there's broader forms of D&O policies that would cover non-monetary claims, failure to maintain or purchase insurance. They would also cover the property manager, things of that sort. Just know the fact that there's a difference and compare. And if you want less coverage, that's fine. But at least you made an educated decision. Workers' comp coverage. You may not have any employees, most don't. And you're not required to carry workers' comp. However, I recommend it. It's prudent. Here's why. You have vendors that come out on your property, landscapers, roofers, what have you. And they may not have a workers' comp policy in force. If they get hurt, there actually is an employer-employee relationship here because you supplied the material, you said that they had to be here at this time, then you're responsible for medical bills and loss of wages. The association can get dragged into a lawsuit. Just that alone, you would want a workers' comp policy for legal defense. Purchase a workers' comp policy, it's inexpensive. The majority of my insurance claims is water leaks. If you were gone for a week and you've got a broken pipe and you've got water that has been spewing out and causing water damage to the drywall, now you've got not only a maintenance issue to fix the problem, but now you have an insurance problem. Every week, I'll get a unit owner calling me, asking me what's covered and what's not covered. I'm shopping my insurance. The association is responsible, obviously, to insure the exterior. I'm talking about condominiums. I'm sticking with condominiums. The association is obviously to insure 100% of the exterior, all the way up to the drywall, including the primer coat of paint, not the finished coat of paint. All original cabinets, all original fixtures, that's also under the association's policy. What's not covered under the association's policy is the finish on the drywall, could be paint, wallpaper, panel, whatever the finish is, and floor covering, carpet, tile, hardwood floors. That's not the association's responsibility. And any upgrades. The kitchen was upgraded to granite countertops and oak cabinets. That increased cost, that's not the association's responsibility. And any personal property. Personal property is if you take your unit, turn it upside down, whatever falls is personal property. Anything that's permanently attached is what's called real property. You want to make sure that you're insuring the building or complex at 100% of the value of the replacement. Not market value, insurance replacement value, okay? Those are two different numbers, night and day numbers. You can take a building and move it into a bad area and the value of that building is going to drop, right? That's market value. But to build that building, it's going to cost relatively the same, right? That's insurance value. And so you want to insure it at 100%. What's the difference between replacement costs and ordinance or law? Replacement cost is this. The insurance company will replace what was there before. If the city codes changed and said any new construction, you have to have sprinkler system in your building. Well, that's $10,000 per unit. If you have 100 units in your complex, I don't know, what's the math? 10,000 times 100, what is that, $1 million? Anybody good with numbers? Who's the accountant here? It's a big number. And that's my concern. Well, that's not what was there before. So the insurance company is not responsible if there's a fire to replace that unless you have ordinance or law. Increased cost of construction. So do you see the difference? Anybody who's licensed as far as insurance goes Anybody and their brothers be willing to give you a quote on insurance, but do they really understand your needs and the right coverage? Very few do. I've been doing this for 30 years. This is all I do, is work with community associations, unit owners, board members, property managers. I don't write pizza restaurants, flower shops. This is what I do to help board members and property managers compare insurance. As long as the association is properly insured, you're okay.